Irene. Appreciate it. Let's talk a different side of tech with Mr. Alan Nuckman, the chief market strategist at bullseyeoption.com. You know, for having an overlapping product with WebEx, Cisco's stock sure trades like a different company. What's your focus on the stock, Alan?
Well, again, I'm strictly a technician, and I trade what the market's telling me what they see. And what the big market is telling me now is this is the time to stand up. Stand up, people. We're at the 4,000
Ladies
level
and gentlemen,
in the S&P.
Alan Nuckman's Adam's apple.
We are right at the 200-day moving average, okay? This is the time to be looking to see if we're going to get a bounce or not, okay? I'm not saying we are, but this is the level that you want to lean on. This is what we look for. So we're right at the midpoint. I was scratching at the TV when you and Ben were, being skeptical about these markets. 4,000 is critical. It's a halfway point of the 3,800 to 4,200 range that we've been in for months and months and months. We're at the 200-day moving average. A lot of things are lining up to see if. Right, and I had to agree with Ben. So we're going to know a lot in the next week or two. We're at the end of earnings season. 94% of companies reported. We had negative earnings growth of 5%, and we're still at 4,000. We've raised rates to 5% from zero in less than a year, and we're still at 4,000. And you talked about housing. I'm not going to get into this because you guys are too young. 5% is where we're at. That's the handle for mortgage rates. Yeah, you guys. You kids. You kids. Yeah, 5%. You know how many people would have loved to get 5% mortgages 10, 20 years ago? Okay, let's talk about trading. Let's talk about making money. Wow.
Where does Cisco fit into the optimism in the market, Alan? Why not buy the SPYs if you're so confident?
This is a better risk-reward play. Again, it's about risk-reward here. Cisco's been stuck between 40 and 50 now for 10 months. It had a fake-out breakout. It rallied with the earnings. I wanted to trade it, but I didn't want to get caught by the binary, situation of earnings. So it's giving us a second chance. It's come back inside that channel. A breakout of that range targets 60. Now, we see bullish divergence, meaning it made new lows, but not new highs, implied volatility. That's a very positive sign. And I also use my my leverage buying indicator that we have to talk about more, that sees accumulation of the positions here at these levels. Some bullish accumulation, and leverage accumulation is usually a sign of more intelligent money. So a breakout in the range like I talked about, target 60. I'm looking at the September option. The September option is only $100 more expensive than the June option for twice as much time. So again, the stock substitution strategy, buying the 45 call for about $6. It's $4 in the money right now.
Okay. So the 45 strike, you're basically just letting this thing, ride, in the money, the Allen standard, the Nuckman issue.
Yes, the better way to trade. That's what you meant to say. It's a better way to trade. 45 is also the midpoint of this range for the last 10 months, a super support level, and it's also the 200-day moving average. So again, I'm leaning on a level here. Being long from 45 shouldn't make anyone as scared, and so it's $4 in the money. And the key here is the payoff. Limited risk, plenty of time. You've got 6 months of time for development here. And if it gets to 60, this option gains 140%. So it's a win-win-win situation.
Way far down there, 45. I mean, something drastic would have to happen to Cisco, it seems like, because it's very stable compared to some of the other big tech companies. Last couple months, it's basically been going sideways. Earnings to earnings, it really hasn't gone anywhere. So, even if it just keeps doing what it's doing, you won't lose money. And you need it to go higher, obviously, to make money.
Right. It did break out after the earnings. It had a positive reaction to earnings. But it came right back down. So it gives us a second chance in this play. And if you look at the market in general, let's talk about the S&P. The S&P is 15% off its lows. We've got a war going on, and we had negative earnings growth. Now, in the second, let's go to the third and fourth quarter, we're going to see positive earnings growth, and they're looking for 10% earnings growth in the fourth quarter. So I'm saying that we've gotten through a lot, and we're still standing here. So like we've said before, it's not necessarily what the market does, is what it doesn't do. And we didn't sell off. We haven't retested those lows. We've been holding strong. And right now, let's see what the next move is. I got to let the market tell me. I'm smart, I think, when it comes to these markets, but I'm going to let the market tell me what's next.
Okay. Hey, Alan, I got one question for you. If we do a video chat right now, not this one, are you a Zoom or are you a WebEx guy?
I'm both. I'll use whatever one. But I think from a risk-reward standpoint, Zoom's got a ton of upside. It's been crushed, and it did have bullish divergence, and it did have that leverage buying bottom that I look for when you see a stock that's overdone to the downside as far as some upside potential.
All right, but you like the security in Cisco right now, the stability of the price action, potential for a little return to that post-earnings bounce.
It's a more stable play in the fact that I'm buying a $600 option. I've got limited risk, downside. Zoom's gonna zoom. That's good and bad. But I think Cisco is a more conservative strategy to move to the upside.
All right, thank you, Alan Nuckman. Always a fun conversation on Monday. A cup of coffee here. You can either have a cup of coffee or get Alan Nuckman on. In my case, have coffee and Mr. Nuckman. It's a great combo. He's a chief market strategist at bullseyeoption.com. Coming back, let's talk some stock picks with David Nelson, including a look at the energy winner that started to lose some of its footing lately, Occidental, still in the good graces of Mr. Buffett, but the shares are near about 8-month lows.